Welcome back to Switzer on the Australian Business Channel. Seek.com.au has been a wonderful market performer. But is there anyone else in the market participating and competing with Seek? I got James Dunn to look at that market and he came up with some very interesting discoveries. James joins us from our Melbourne studio. James, how are you?
Good afternoon, Peter, or good evening. It's well and truly evening now, isn't it?
It certainly is. But when I came into Brisbane, it was a beautiful sunset. It made me think it was afternoon. I'm sure you haven't got the same sunset in Melbourne. Now, mate, Seek.com.au has been a fantastic market performer. Tell us how it's actually performed in recent times.
Well, it has been a very good market performer, and it is one of those businesses, Peter, that really cut the lunch of Fairfax. It took the employment rivers of gold, the classified ads that were... There were three of these businesses, Pete, and it's a major indictment on Fairfax. We've spoken about this before, that they allowed the advertising streams for employment to be taken by Seek. They allowed the advertising streams for cars to be taken by carsales.com.au, and they allowed the housing ones to be taken by businesses including realestate.com.au. So they lost their rivers of gold, and Seek grabbed one of the rivers and turned the flow of gold on itself, and it's done very, very well. And employment websites online is its major business, not just in Australia. It's got a very good footprint in the emerging markets, particularly in China, where it's invested in an online website along with James Packer, who owns just under 5% of Seek. Also in Brazil and Mexico, it's gone into online websites there, and really it saw the future. Job ads were moving online, and it's done extremely well.
I always say to my business audiences when I talk about the Seek story, in a sense they worked out that most of the employees we have in our businesses, while they're doing our work, in between, they're looking at other places they could be working. Seek, in a sense, understood that market much better than Fairfax, for example.
Well, that's right, and not only understood it better, took it. And is moving, as I say, into those emerging markets where those trends will follow what's happened in the developed world. So it's been a very, very strong stock, Pete. Priced for pretty good growth, you've got to say. I mean, it's on PEs around 21.5, 22 times earnings, and a dividend yield of 1.8% this year and a bit over 2% in 14. So not a great yield stock. Those kinds of numbers do indicate a growth stock that the market's been happy with. Not so happy with it at the moment. It's certainly not a uniform recommendation pile when you look at who follows the stock. There's everything from buys to underperforms, underweights and neutrals, Pete. So it's a stock that we've seen this so often on the stock market. When growth stocks do really well, eventually they seem to sit high and dry. And I think the consensus move for Seek towards its target price, the consensus target price, is a hefty downward move, Pete, as we speak at the moment.
But given the fact they're moving to so many unusual overseas markets, they also could have growth that the analysts can't really see or understand. And they have actually been performing well capital gain wise, haven't they? And I guess the fact they're not paying a great dividend, they're probably using their money for their growth. That story, could it continue?
Well, that's right. Classic growth stock numbers. And moving into the markets we've talked about, particularly China, Brazil and Mexico, maybe their growth prospects are pretty good. I mean, the Australian market, when you say the consensus seems to expect quite a haircut coming off the share price and thus the market capitalisation, who's to say, as we know, Peter, that the Australian market knows it all?
Now, do they have a rival out there? Like, all we have to do is talk about Seek. I know there are some companies out there, but are they really rivaling Seek to try and take some market share off them?
No, not many people do, particularly on the stock market. Not many people do what Seek does. It's an online employment website operator, and it's very good at it. I mean, if you look in that field, there's quite a few listed recruitment stocks in Australia, but they have really struggled because the recruitment market has has been a mess post-GFC. It's coming back to, well, the economy's going reasonably well, but we've got an unemployment rate at 5.6%, a 3.5-year high. And I did notice, Peter, the latest PricewaterhouseCoopers survey saying that only 1 in 2 companies expect to hire in the next couple of years to make hires. So that's a market that is not confident and is battening down the hatches for further economic, just not expecting growth. It's really pessimistic, the white collar market, about growth. And so, of course, the listed recruiters have really been struggling. There's a couple of good prospects in there. Skilled, a different business completely to Seek. Skilled as a labour hire business, labour hire contractor, and with 58% of its revenues coming from the resources, oil and gas area, it's benefited very, very strongly from that. And it's put a very big bet. Its business is very, very heavily tapped into that market, which is still going well. We've still got this pipeline of mining investment, and Skilled's a good business in that. You look at Skilled, 5.5%, 6% yields over the next 2 financial years on consensus estimates. That's pretty good numbers, particularly if you're in a self-managed super fund. Yeah,
without a doubt. Now let's go. Chandler McLeod is a pretty big name in recruitment. Does it have any sort of favourable things to say about it in terms of its stock price?
Well, Chandler McLeod is yes, probably the only other of those businesses in that area that you would consider investing in. Although it's only small, I think it's worth about $285 million. So it's very much a small cap, Peter. But yes, it's got some good numbers. And what Chandler McLeod is doing is again moving away from reliance on recruitment. It's gone into markets where it feels it can vertically integrate. So had a nice little acquisition to move into supplying outsourced labour services to the hotels market. Just followed up very, very recently in 2013 with another acquisition that's moved it into the health business, which is, of course, the demographics for that are pretty good. And you look at Chandler McLeod, where it is on expected earnings, also 6-7% yields over the next couple of years, which particularly on the FY14 numbers, Peter, 7.15% expected yield. So you can't, of course, take that to the bank yet. But if that comes through, fully franked, you're looking, if you were owning that in a self-managed super fund that was in pension mode, that kind of yield would equate to something north of 10%. So risky stock because it's small, but made some very good acquisitions. And Chandler McLeod, for its size, is a pretty dynamic business, Peter.
Yeah, I've noticed that. Now, just before we go, whatever happened to the other companies in the market? You know, like was it Talent 2, Julia Ross's business? Where are they all gone?
Well, Talent 2 was Gary Morgan and Andrew Banks. That was their second coming on the stock market after Morgan and Banks, and they eventually took it back. They bought it back off the market. Julia Ross Recruitment, that was a very, very high-profile business in the 2000s, Peter. But that went now. If I could just look down to see that went to that was taken over actually by Chandler McLeod, which
I thought it was, yeah,
not surprising. So well, that. The business that Chandler McLeod has put together, the groupings of businesses, is pretty interesting, as I said before, particularly these 2 most recent acquisitions. So you've got, of the 3 we've spoken about, Peter, you've got Seek moving very, very emphatically into the emerging markets offshore. You've got Skilled, which, as I said, has a very big exposure to the resources and the oil and gas sectors. And you've got Chandler McLeod, which is looking to build into areas where it can vertically integrate, and hotels and health, which are 2 of our biggest growing sectors in our services economy. That's where it's decided to spread its blanket.
Absolutely spot on. So if anyone wants to look into what James has found when he's done his digging, his research, the Switzer Super Report actually has that. So I guess if you Google Switzer Super Report and James Dunn and Seek, it'll come up. Certainly a great piece of analysis, James. Thanks for joining us. See you in a few weeks' time.
Pleasure, Peter. Anytime.
Okay, buddy.